Hey guys, Michael Edward here with True Trading Group. December 6th, my first day trading from Dubai. And it started off on the wrong foot, actually. I was 0 for 2 in the morning, but then maybe the jet lag hadn't worn off yet. And then there was a really nice setup in RSYS that helped me catch a 16% gain and actually bring me from red to green on the day. And I was able to finish green on the day. So I want to talk about this RSYS, but this is a twofold lesson on this trade because there's something that we can learn from my entry, but there's something I think is even more important that we can learn from my exit, because my exit was picture perfect, and I have one very specific chart pattern to thank for that exit. But before we go over the exit, let me talk about my entry first, because like I said, there's two lessons that we can learn, one from the entry, one from the exit. So let's get to the chart. You see this RSYS right around noon. Catalyst came out with the company. You start to see the stock push. Heavy volume starts coming into the stock. Jumps up on my radar. Okay, right around 98, 99 cents. It jumped up on my radar. It was right around here. Then you see the stock break through $1 and then start to pull in. Now, I started to look for support when the stock started pulling in, trying to figure out where do I think support is going to kick in. Okay, and I started to notice something. I drew a Fibonacci retracement level on the move, low to the high. And I noticed that this VWAP, this orange line, lined up perfectly with the 50 Fibonacci retracement level. You can see right there, the stock found support at that VWAP and 50 Fibonacci retracement level. Now the 38.2 line, you guys have seen I've made a bunch of videos on the 38.2 line acting as support, but that's a more bullish support level than the 50. But nonetheless, the 50 is still a significant area, but it was more so the VWAP, because you can see as soon as the stock started to push and volume started coming in, that VWAP acted as support the entire time. It never once broke below that VWAP. You can see here it hugged it, hugged it, hugged it, hugged it, boom, pushed off of it. So once I saw the stock pull back in and it found support right at the VWAP, which lined up perfectly with the 50 Fibonacci level, that is when I really started to like the trade. Okay, and then once you saw how quickly it snapped back off of that support level, came down, touched 97, and very quickly shot back up to 104, a sign of strength at that support level. When a stock goes down, touches it, and quickly jumps off of it, sign of strength on that support level. That's what caused me to enter this trade at $1.03. Okay, I ended up taking some profit at 114 just to lock in some gains, and then 118 and 119 was my final take profit right here. Okay. The other thing I want to point out is that previous high. So there was that previous high of the day. After the stock broke that high right here on an increase in volume, you see that area held as support, pulled back in, retested support, and then pushed and gave us that final extension move, and I took my profits at 119. Okay, so that's the entry. Lesson to be learned there is when you see that VWAP holding support the entire time, when there's heavy volume and the stock just can't break below VWAP, can't break below VWAP, when it pulls back in after an extension, it pulls back in, when you see the VWAP line up as support, and it lines up with either the 38.2, the 50, or the 23.6 line on your Fibonacci retracement level. I don't like the 61.8 line. That's the last line of support on a pull-in, but I think that's too much of a pull-in on a move. So if a stock pulls all the way back to the 61.8 line, I'd be very careful. I don't know if you're going to get as strong of a move off of that level as you would the 50, definitely the 38.2. Okay, but when you see that VWAP kick in as support, and it lines up perfectly with a support level on a Fibonacci, jump in it. Okay, jump in it and try to ride that wave, and that's exactly what happened in that RSYS, and it helped me catch 16% gain to go from red to green on the day. All right, that's lesson 1. Now let's go to lesson 2 with RSYS and talk about my exit, because my exit was absolutely perfect, and I have one very specific chart pattern to thank for it, and that is an ascending wedge. Ascending wedges are trend reversal patterns. Okay, they typically occur at the top end of an up move, and then when that pattern triggers, it signifies a reversal in the trend, and the stock will then start to roll over, sell off, and then you'll see downward selling pressure as the stock, does an about face and goes the other way. As you see here, RSYS up, down. Okay, now I always teach our members, look for chart patterns on multiple time frames. I use a 3-minute, 5-minute, and a 15-minute. Here's a 3-minute. I didn't necessarily see the pattern as clearly on a 3-minute. Let me do this. Let me do that so you can't see. So that's what the stock looked like, guys, when I started to identify this pattern. I didn't necessarily see the ascending wedge on a 3-minute. I didn't necessarily see it on a 15-minute, but I did see it on a 5-minute. Okay, I don't know what it was. I saw it on a 5. I didn't see it on a 3 or 15. Now let me just pan this back out just so it'll be easier for me to draw on the screen. Here is your ascending wedge pattern. Okay, higher highs, higher lows as these two resistance and support levels come to an inflection point. Now, we also identified on the daily chart heavy resistance at $1.23. Okay, let me go to the daily chart. Here's your resistance. Okay, you can see here previous support. All right, you can see how that it was a previous level of support. After it broke below it, you see how the sell-off ensued, right? Okay, so we know that area is going to be an area of resistance for the stock. When I entered the trade and I said if it breaks through that high of the day, when I entered the trade at 103, I said to look for that 50-day moving average to be your first area of resistance right here with this blue line on my screen, and then that final level of resistance would be that 125 area. Okay, so let's go back to the intraday chart now. On the intraday chart, I saw this ascending wedge pattern start to form. The high of the day was $1.23 right there. Okay, and we know that there's resistance at $1.23, $1.24 area that we just pointed out on the daily. So I started to get a little bit wary when I saw this ascending wedge pattern. Then I saw this. Let me go out to this is a 3-minute actually. Here, so okay, here's your 5-minute. This is what I want. It's a little bit more clear. When a stock does that, when it tails through the top resistance line on that Fibonacci, that usually signifies the top. Okay, that also is $1.23, right? That resistance level we spoke about on the daily. That usually signifies the top. When a stock tails through that top end of the range and then quickly pulls back into the wedge. Oh, excuse me, I have to sneeze. So that would usually signify the top end of the move. So once I saw it tail through and pull back into the wedge, and that resistance level was sitting right there on the daily, I said, guys, I'm jumping out, final take profit right here, $1.19. Okay, and I exited the trade. Then you can see how the stock broke below that support, that downward support level, and the sell-off just ensued, and the ascending wedge pattern triggered, and the stock rolled over. But it was identifying this ascending wedge pattern that helped me take my last profit at $1.19, helped me lock in 16% gains on the trade, and helped me go from red to green on the day. If I did not see this pattern, and I got stuck in this down move and this sell-off, and the stock went all the way back below where I even bought it at, I never would have went red to green. Okay, I would have finished the day red. And that's the second lesson that I want you to take away from this RSYS trade. It's not just the entry, but also the exit. And being able to identify this pattern, especially when that pattern is lining up with a resistance level on the daily chart. Okay, so that 123 high is right at that resistance level we spoke about on the daily, which is 123 to 125. Okay, so that once I saw that, I said, guys, I'm jumping out of the trade. I'm done here. I'm locking my profits. And then you saw the stock just rolled over 15 minutes after I sold my final piece of my position. Okay, and it's not a crystal ball. It's not telling the future. It's not being psychic. It's just recognizing a chart pattern and understanding what stocks do when these patterns trigger, and using that resistance level on the daily chart helped me feel confident that, you know what, this move right here, that little tail, that's the high. It's time to get out. I'll see you guys in chat.